of finance, Wall Street, New York City. Down the street they have a big bronze statue of a bull, of course celebrating bull markets in New York City, which I don't understand why they would just celebrate bull markets. There's also bear markets, and you can make money in bear markets too with shorting, except like in the fall of 2008 when they outlawed shorting. Now, I understand outlawing naked shorting because that's a crime in its own right. It's just fraud to say you have something when you don't. That's in essence what naked shorting is. Shorting is borrowing stock from someone who owns it, selling it immediately, taking the proceeds from the sale, and holding on to it. In shorting, you're betting the stock will go down. By selling Boeing shares at $100 when you believe it will go down to $80, you're betting your own money that something's wrong at, say, Boeing, and therefore you can make money by borrowing 100 shares today, selling it today. When it goes down to 80, you've got to buy the shares at 80 and then give them back to the person, the shares back to the person you borrowed the shares from. Well, at that point, you've made the difference between the $100 a share you sold a few weeks ago and the $80 you pay today. There's your money. And the person who lent you the shares makes a small fee for lending you the shares. So that's in essence shorting. Now, to fraudulently say you borrowed the shares or something, that's just fraud. So naked short selling is a crime, always has been. So apparently it hasn't been. People are doing it. So fraud should be illegal, one would think, especially in this paragon of virtue, the Wall Street area. Now, capital of virtue. Now, naked short selling, short selling is an example of how we know we do not need government regulation. Because of the short sellers, because of people who bet their own money that the reports that they're reading about corporations, that what they've learned on their own studying a particular corporation, people who believe they have learned what the crowd does not learn or has not appreciated, they will bet their own money that a business will go down. When they do put their own money on the line, that is in essence where the regulation comes in. Private individuals are regulating companies. It was private individuals like Chanos, short seller, famous short seller in America. Chanos spotted Enron before any possible the Securities Exchange Commission or anybody else. Bernie Madoff was nobody shorted Bernie Madoff because that was just fraud, but short sellers studying Bernie Madoff's claims spotted that it was all nonsense 10 years ago. So if you want a properly regulated industry like financial, you must rely upon private individuals who will do it and who bet their own money. And those who are wrong when they bet their own money, they pay exponentially. People who own companies or shareholders in a own company, they listen to the short seller's reason for shorting a business, and they say, oh, the short seller is wrong, I'm going to lend out my stock, I'm going to hang on to some. When they find out it's wrong, there'll be a short squeeze, I'll hang on to my stock and I'll sell my stock at a super high price to the short sellers, and then it'll drop back down, and then I'll buy it again. There's tremendous opportunities if the short seller is wrong. Tremendous opportunities for the long holders of a given stock. So the fact that there was regulation allowed Bernie Madoff to trade, and dozens of others has turned out since then, to trade on the false security given by the Securities and Exchange Commission. Private security, that is, short sellers, are the natural and best way to regulate these markets. In Chicago, at the great Chicago Mercantile Exchange, they have a saying, and that is, only suckers beef. That is, if you got burned by stockbrokers or fraud or whatever else, you were a sucker. That was your crop. I said, oh, but the Security Exchange Commission should have been on top of it. The Chicago Board of Trade should have been on top of it. No, they're not on top of it. They can't be. Why pretend they can when they can't? And why pretend private industry can't take care of it through their own means when they can? People love to have officials, I guess. So, a lot of people wondering, well, where should I put our money since I can't trust the regulators, can't trust the stockbrokers, can't trust, should I put it in gold? Well, you could, except in 1933, the United States government seized the gold just a few weeks before the price shot up. Seized at a low price, shot it up at a high price. So there's really no way to protect yourself. If you want to protect yourself, you need to start your own business, invest your own business, and have it spread around your ability to make money, to trade, whatever you, of course, have a passion for. That's what my classes are about, how to go about doing and how to affect, how to translate your passion into products and into how to monetize it, as they say on Wall Street. We also have here at the center of Wall Street, as you'll see, a wonderful statue of the great American George Washington right there. Let's see if I can get that to come in a little bit for you. Put by the Chamber of Commerce. That's George Washington on the right. That's not George Washington on the left. But it was put there by the Chamber of Commerce back in 1886, representing that great American George Washington. The city of Cincinnati is named after George Washington as well, after the dictator of Rome called Cincinnatus. He was a man who assumed the dictatorship during the Republic in Rome, and then after sorting things out, he went back to his farm. Now that was probably the first and the last time a dictator took over, sorted things out, and then went back to his farm. So Cincinnati was something of a code name for George Washington, who assumed the power at the top of the system, and then went back to being a gentleman farmer. A wonderful thing. We sort of have that now with George Bush, born in Connecticut, went to private schools up in Connecticut, and is now ran as president as a Texan farmer, I guess, oilman or something, I don't know, anyway. So the fight in America is against the two conflicting sides are the George Washington, Thomas Jefferson gentleman farmers and the Alexander Hamilton stock exchange, big government, powerful progression of force kind of ethic. So the Wall Street, of course, area is the center of such power in America. So that's my Wall Street, New York lesson for you. We don't need any regulation except the free market, which will regulate itself. And just between you and me, I'm not a capitalist. I'm actually a free market anti-capitalist. Someday I'll have to go into this, but I believe charging interest is wrong, unethical. So thing right here in the holies of the interest-bearing center of the world, but someday I'll bloviate on why interest is unethical, charging interest is unethical. But just think about it. None of the problems that we're having economically right now, and none of the booms would occur if it were not for that one little element of charging interest. Could there be something wrong with charging interest? We'll have to go into that later.